Our clients, although they've taken a little more exposure to the market, not necessarily doing it through equities. Equities were fairly flat, but they were buying more fixed income, and you wouldn't think that in this type of environment, but I think a big part of it being, the tariff overhang still weighing on the market overall. Now we saw some action on it today with the tweets from the president over the weekend. So I think you see some of the reasons we've had a little bit of tepid volume as we've had this incredible rally over the last few weeks.
Well, just like the professional money managers, the rally's great, but where do we go from here seems to be their question. Seems as if retail traders are thinking the same thing as well. I mean, it's been a significant run up. What were some of the top buys?
Well, some of the top buys included Disney, both WBA and CVS, as they both hit 52-week lows, and they both had some news individually. CVS doing the dental deal, and so with that, we also saw the Lyft. I will say Lyft was a popular name to be bought kind of throughout the month, actually, particularly as it cratered there. Once it started to crater, got under 65, people started to buy it.
Right, and I think that might be a trend with all these decacorn IPOs coming out. Everybody wants a piece of those to have the opportunity to get into a Lyft, to get into a Zoom, an Uber. There's pent-up demand for that.
And one of the things I guess I was happiest about is at least there wasn't huge demand right on the IPO date, but after the sell-off is when people, it's a little bit lower from there, even where they started buying, but at least from that point of view, people took their time about what they thought was a more fair price than necessarily right on the IPO and in that run-up with the IPO.
Well, I think it's encouraging to see retail traders get more smart when it comes to IPO trading. Let it consolidate for a couple days, try and establish some sort of a range there. Where were you seeing some sells?
Well, back to kind of where we started, I think the selling is really interesting in that a lot of it was in the FANG stocks. And, Facebook, Amazon, Apple. So when you start to see those stocks, such a difference from when you and I would talk 12 or 18 months ago, when every month it was like, all right, well, they bought Facebook and Apple again. So many people would say, well, why would they have sold these as we were hitting all-time highs? I think to your point, retail investors are getting smarter. They're taking some profits when they should be. Amazon pops after earnings. Twitter, they sold also, pops after earnings. To me, this is intelligent times for people to at least take some profits, take some risk off the table as we get to all-time highs. A knock on retail investors has always been that they are the dumb money. What we see is our clients who interact with at least once a month are actually making decisions, as you said, that are very similar to money managers.
All right, let's get your market outlook. It was a little bit of a surprise this weekend.
It was quite a surprise this weekend, and I think you saw that in the reaction. The fact that the S&Ps were down, the futures were down so much, the Nasdaq futures down so much as we headed into today. We stabilized a little bit here as you and I talked mid-morning, but I think that every indication we had was that things were going to be okay. It may take longer than we thought, whatever it may be, but things would be okay. Then we get this news. It was a bombshell, and you saw in the immediate reaction as soon as things opened last night, boom, they were down, and they went down quickly further. So the market doesn't like to be surprised, and I think this is one more element of it. We will see where things land. I will say the president has a little bit of a history of a grandiose statement followed by more practical settlements.
And we've seen that when the market opened. I mean, we're significantly off the lows. Last time I had checked, and it seems to be that Trump playbook where if you don't necessarily get your way, you kind of put out a statement or you use this as a tougher negotiating tactic. And that seems to be the trend over the past couple of years.
It absolutely has been, and it's worked pretty successfully. You may not like all the president's statements, whatever, and I think there are some things that have offended quite a few people, and sometimes rightfully so. But there has been a lot of results also. So it's one of those things. I don't want to get into a political discussion by any stretch of the imagination, but let's just say it's a negotiating tactic.
All right, JJ, thank you as always for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.